There are a lot of people telling you how to get rich within a few weeks just by trading or investing in one penny stock that isn't even profitable yet. I won't do any of that in this video. I will give you basic investing principles that will help you for the rest of your life. And I promise you that I won't try to sell any product or membership to you. Let's start with one mistake that I see so many people making. Buying stocks because everybody talks about them. Yes, having a great business model is important, but just because the company has a great product doesn't mean the stock will perform well. Valuations matter, and a lot of newsletters tend to hype up companies that could possibly be important in the future, but have no income yet, negative free cash flow and high debt. So always be careful when you read about stocks in the newsletters or something somewhere else. But before I tell you how to invest, let me tell you one important thing. The fact that you are watching this video right now shows me that you are on the right path. Starting to invest money is the best thing you can do to compound wealth over time. And it's better to start today than tomorrow. And now that you have made the decision to start investing, it is important that you pick the right stocks. There are two kinds of investments, and I think this picture describes it perfectly. A lot of people invest in stocks where they have a big chance of losing their entire investment, but also a small chance for a huge payoff. This is kind of like winning the lottery. I suggest that you try to get rich slowly. Don't think in stocks and share prices. If you invest in a stock, you are a part of the company, a part owner of the company. And it's very important to always keep that in mind, especially during bad market times. It's not just a piece of paper that you own, it's a real company with real products and real people working in it. This is the mindset you need as a long-term investor, and trust me, it will help you sleep good at night. Now that you have the mindset of a company owner rather than a stock owner, there are a few attributes that I want to tell you about. Number one is based on a quote of Charlie Munger. A great business at a fair price is superior to a fair business at a great price. Try to find companies with a great business model that you actually understand. You have to understand how the company works and what makes their products great, and the company should have a wide moat. If you have found a company with a business model that you like and understand, you still have to take a look at the company's valuation. Just because the business model is great doesn't mean the company is a good investment. And this is a mistake that I see so many people do. They put in a lot of effort to understand the company. They know really well how the company works. But when it comes to numbers and calculations, they don't want to invest the time. And that's very sad because they already put in so much effort. And it's just like they didn't make the last needed step. Number two is based on a quote of Peter Lynch. It's very hard to go bankrupt when you have no debt. You always want to look at a company's net debt before you invest into it. One good rule of thumb is net debt divided by EBITDA should be less than 3. That's especially important in times of rising interest rates, because then those companies with high debt need to use a big part of their earnings to pay back their debt, and they can't use the money to invest it into the company or to pay you a dividend. And I can guarantee you, if you keep those two rules in mind, it will save you a lot of trouble, and you will be immediately a better investor than 90% of the people investing in the stock market. Which brings us to the third and last point for today. There is a lot of data showing us that companies that generate high free cash flow margins, which is free cash flow divided by revenue, and companies that provide high free cash flow yields, which is free cash flow divided by enterprise value, outperform the market by far. And this makes sense because they can use the high free cash flow to reward share owners by either paying down debt, which also reduces the risk of the company declaring bankruptcy, or by paying a dividend, or by buying back the stock, or making strategic acquisitions or investments. Of course, there is a lot more to learn about investing in the stock market, but oftentimes it is wiser to focus on the basics first. And those are the principles that you should always keep in mind. They work in every market scenario. Doesn't matter if interest rates go up or down, or if there are some economical problems. And I really hope that this video will help you become a successful investor in the future. If you want to see some real stock examples that I talk about and analyze, go check out my channel or look at the pinned comment below.